The economic situation in the region has become even better than our already very positive outlook in the autumn. Last year was the best year for growth in this region since 2011, and it was the first time since 2007 that all 22 economies for which we provide forecasts grew positively. We've made, as a result, further upward revisions to our forecast, particularly in the EU members in the region, in Turkey and in parts of the Western Balkans, where we see very high levels of economic activity. They have been partly offset by a couple of downward forecasts, notably in the CIS and Ukraine region, and especially in Russia. That has been the laggard of the recovery in this region for quite some time. And although things have improved somewhat, it remains a much weaker growth story than for the rest of the region. And that's something that we expect to continue. We think that economic activity will remain very strong in the region for at least another couple of years. There are a lot of supportive factors standing behind this. At the global level, we have a very strong coordinated upswing in the US, the Eurozone and China, all the big engines of the global economy. And we don't expect that to peter out anytime soon. Also locally, the recovery has strengthened but also become broader. We see tighter labour markets, rising wages, driving much better consumption growth and also stronger investment growth. And at the same time, the export sector is really benefiting from this stronger external picture as well. Within this, there are some risks of overheating. That's something that's been talked about a lot. We compiled an index. We looked at about 15 indicators across 20 countries in the region. And while we think that there isn't overheating in the region as a whole, there are risks of overheating in certain parts, notably we would say in Turkey and Romania. There are notable significant risks for growth in the region at the moment. At the global level, we're a bit concerned about monetary tightening in the US and the pace of that. And if rates in the US rise more quickly than expected, certain countries in our region are exposed to that. We're also concerned, obviously, now about the potential for a trade war. Many economies in our region are very open. They will be very badly hit from any trade war at the global level. Locally, risks exist within the region, of course. The Donbass conflict, for example. We're particularly concerned about divisions within the EU, loosely along the lines of East versus West, and the potential that EU budget transfers will be much smaller after 2020, and considering the importance to the EU members in the region of these transfers, that could be significant. Nevertheless, while these risks exist and will continue to remain in the background this year, next year, the main point is that the region, growth in the region, hasn't been this good for 6 years, and we expect that to continue.